Hey, it's David Berry, Texas Insurance Pro. Got a quick tip for, a little bit of information regarding the commercial auto segment. Excuse the sling. A lot of guys been calling, asking for cheap rates, low rates on commercial auto, trucking insurance, especially long haul. Don't have good news for you. What I can tell you is what's going on in the industry. Just based on the latest data, uh, since 2011, the commercial auto insurance industry as a whole has lost about 10 cents on the dollar. Well, actually, between 6 and 10 cents on the dollar. So that means that if the insurance companies as a whole are losing money on, say, long haul truckers or box trucks or tow trucks or whatever, then what they're going to have to do to stay profitable and be able to pay claims and keep their A ratings is they have to raise rates. This phenomenon has been happening since about 2011. Also, what's happening is, in fact, last year, the commercial auto segment in 2016 as a whole lost about 10 cents on the dollar. So for every dollar people spent, the insurance company had to throw in another 10 cents on the dollar. That's unheard of. So that means that rate increases are coming. Some other reasons why your rates are high. Companies falling in and out of love with trucking, especially long haul truckers, and some of your medium thing, your tow trucks. Let's use Progressive for an example. Good company. They're such a big carrier, but then what happens with Progressive is they start losing 10 cents on the dollar, and they can't lose 10 cents on the dollar very long and stay profitable. So they stop writing long haul trucks for a while. They stopped riding new ventures for a while. They stopped riding tow trucks for a while. As a result, that sent a lot of shockwaves across the industry in 2016 and 2017. And then subsequently they jumped back in the market and the rates are higher, and so now you're trying to get a tow truck and it's somebody's quoting you $10,000-$15,000 a year. And because Progressive is such a big company, they can afford to withstand the slowdown. But all of the small companies that might have offered you the same coverage for, say, half that price, now they have to raise their rates because they're losing the money that didn't want. So the fact that a big company in different regions would, if they back out of the business and they decide to stop writing something, someone picks up the slack. Someone always picks up the slack. So you're seeing smaller insurance companies taking on those risks, and as a result, their rate increases are going to be larger than, say, a Progressive or a, I don't know, Berkshire Hathaway or somebody like that can afford to write a lot of commercial auto business. So you got that, people falling in and out of love with different segments. Then also you just got to consider that some carriers will say we'll write say dump trucks or something, but we won't write them around Dallas, or we won't write them if they're less than 3 years or without authority less than 3 years. So you have all of these different obstacles that carriers are, that they're falling in love with. So if a carrier say they want to write dump trucks and they're in Dallas and they write nothing but dump trucks, well, what about all of the tow trucks? What about all of the tractors? What about all of the other stuff that you used to do? Well, sorry, we only want to do dump trucks. So with carriers, if the carriers are getting very picky, then it makes it harder for some of the guys like the general freight guys to get rates in commercial auto. Another thing that I've noticed is that, I mean, it's quite frankly, you see more, and this was even quoted I saw an article I read the other day in National Underwriter. It talks about the fact that distracted driving is affecting, not only does it affect small cars, but it affects big cars as well. So accident frequency and severity, people are paying out more bodily injury and property damage in the larger units. So of course that's going to play a role in it as well. So the the prognosis for the future, I don't know. Right now, because the industry has been taking commercial auto trucking industry has been taking a lot of losses within the last since 2011. The insurance companies have nothing to do other than raise rates. That's unfortunate because unless they can find a way to stabilize the rates, they have to raise rates and keep their A rating because you can only lose 10 cents on the dollar too long for so long. So what can you do to get your rates down? It's not as easy as giving someone a discount on a car insurance policy or something like that. But what I can tell you is that if you want the best rates, the best drivers I've seen are over age 30. They have experience as a business owner in the same type of business that they're doing. So if you're doing straight trucks, you're jumping into straight trucks, you're starting a business as a straight truck operator. Maybe you've been in business 2 or 3 years, you're over 30, no drivers under 30, clean driving record. Those are the guys that are going to get the best rates. Local, light, intermediate radius. Anything over 500 miles, they're going to consider long haul, and all bets are off. Premiums go over 15,000 a year. What else would I tell someone? Not only I would tell someone if they're starting a trucking business right now that they probably want to stay with some of the lighter stuff, not crossing state lines in the state of Texas, because, for instance, I have for straight trucks. If you cross state lines, I have maybe 3 or 4 carriers just off the top of my head that I can think of that I can write the insurance with. But if you cross state lines, that number drops down to, say, 1 or 2 carriers. And it makes it even harder if it's a new venture. So that's another thing I would tell someone. If you're starting out, start out slow, start out local, get your feet wet, and make sure that it's something that you can do full time. You can't be part time as well, because the rates no longer support people that that do the business part time. I guess that's tip number 3, is that you probably want to do it. Make sure that this is something you're going to do full time before you jump into it and start trying to do part time, because insurance rates are not going to justify your just doing it once or twice a week. You've got to do work. And finally, I think it's one of the most important things is to take the insurance and the business, not just the insurance, but just the business of trucking, transportation, commercial auto delivery, whatever your segment of commercial auto is to take it seriously, because your business plan needs to survive your getting in and out of the truck, getting in and out of the cab, getting in and out of the car. If you're just a delivery driver and you're trying to run a business, it's kind of hard to run the business and to do your loads and get paid and do all of the compliance stuff and still drive your car. So what I would tell people is build a plan around your running your business, not around your working in your business. If that makes sense. I think it makes sense. So it's going to be tough. Insurance companies are having a hard time being profitable in the commercial auto segment, and all of the prognosticators, the insurance pundits have said it's a tough road to profitability. So it's a race that you're gonna have to. If you're in it, you're gonna have to be in it for the long haul. If you have any questions about anything about commercial auto insurance, fill out comments below or visit me at txinsurancepro.com. I'm David Berry. Till next time.